Hey folks, Rick with Realty Austin. Wanted to kind of wrap up what's happened in 2022, discuss a little bit of market data, and then we're going to take a look into my crystal ball and we're going to see what's going to be happening for buyers and sellers in 2023. One of the things I like to remind folks about is that generally when it comes to real estate, it's always good to buy real estate and wait. Don't wait to buy real estate in most cases. So that's some good advice right there, because real estate tends to grow in value over time. It's generally not an overnight success like it has been the last couple of years. So it is a longer term investment for most. Right now, when it comes to buying a home, it really comes to a matter of perspective and what are you looking for to buy a home, and how do you feel about where the market is? Are you comfortable with interest rates? Are you comfortable with the inventory that is on the market right now? I will tell you, I bought a home about 45 days ago. So I think it is a fantastic time to buy under certain circumstances. For me, it was a great time to take my existing home, rent it out, turn it into a rental income property for me, and then I was able to buy another home. Now, granted, I did pay a little more interest than I would like to, but I do plan on refinancing in the next year or so when rates come down, and I feel pretty confident that rates will be coming down. So we'll move on and check out some data and see what's going on. There's a real estate guru some of you may have heard of. His name is Dave Ramsey. He's kind of real estate. He talks about just basic personal financial health, things that you need to be doing when it comes to buying cars, credit cards, homes, those types of things. Something to keep in mind, Dave Ramsey right now thinks it is a fantastic time to buy a home for most people. He usually does not say that. The last couple of years he was not super bullish on the market, but he has changed his tune with where the market is right now, because the market certainly favors buyers. It no longer favors sellers. When I first got into real estate, it was during the great mortgage meltdown about 10, 15 years ago. So the first probably 50 deals I did were truly foreclosures and short sales. So that was a real eye-opener for me. So I gained some great experience there. But I do get questions now like, are we in a market that's going to crash? Are there tons of foreclosures coming on the market? Well, let's take a look at that. As you can see here, back in like 2010, where we were still kind of in the mortgage meltdown years, there were quite a few distressed properties, which would be foreclosures and short sales. Right now, we're kind of flatlined almost at the bottom. So most folks have so much equity in their homes that foreclosures and short sales are not something that most people are doing. So generally, they can work out a deal with the bank or sell the home and be able to walk away and still pocket a little bit of money. So that's really not something that's on the table for the future. Let's talk interest rates again real quick. Let's take a look at where rates were. So this goes back to 1990. So you can see rates were over 10% in 1990. They fell. They were really, really low the last couple of years because the government really artificially propped up the interest rates, or propped them down, if you want to look at it that way. So now the government's kind of backing off, and that's one of the reasons why rates are going up a little bit again. So odds of seeing interest rates in the 3s and low 4s in our near future or future period, probably pretty slim. I would think if you ever got anything in the 4s, mid 4s, high 4s, that would be fantastic. Hopefully it'll at least settle in the 5s, and then that'll make homes more affordable for more people if they're in the 5s. So right here is a report from the National Association of Realtors. These are median prices of existing homes, just to give you an idea of where home prices have been. This goes back to 2018, kind of October of 2018. This is nationally. The average price of homes were a little bit over $250,000. You can see right now they're at about $380,000. So you see a really super steady, just really solid growth in homes. I think they will come down. We're going to kind of hit a plateau here in a little bit, which I think we'll talk about that here in a second, but I don't think prices are going to go down a whole lot more than where they're at right now. Again, another really interesting chart from the National Association of Realtors. This is their forecast. So what they're saying, this is kind of in 2019, you can see home prices went up 4.9%, which that's not too big of a surprise. And then we had kind of the pandemic effect, right, at 9.1, and then last year in 2021, came in at 16.9. So that was a challenging and fun year. Forecast for this year, it looks like this year, generally home prices are going to end up about 10% over the previous year. Next year, they're forecasting about 1% over. So we're just going to kind of stay right about probably where we end, is what next year's kind of looking at. And I would agree with that. That's probably about where it's going to be. I do think we have December. Obviously, those data numbers aren't going to be reported until mid-January. January is traditionally a slow month. So I do anticipate prices leveling off and kind of going down a little bit further for the next 2 to 3 months. And then once we hit the February, March, April, then I think we'll start to see prices, stabilize and then go up from there. So I think in the spring market too, which typically hits about early February, like right after Super Bowl or right thereabouts, I think then we're going to start seeing more and more people start getting interested in buying homes. So anyway, right now nobody's buying homes, so it's actually a really good time to buy homes because I said I bought a home and I got a great deal on the home that I would not have gotten in the last couple of years. So keep that in mind. So anyway, National Association of Realtors forecast for 2024 going back up to 5% price appreciation there in unit sales and that. So it's 2023 is going to be a decent year to buy, probably sooner rather than later in most cases. Now I wanted to dig into a little bit into Austin specific before we sign off for the year for our market forecast. Here's the average close price for this year. So you can see we started up in January, which is pretty typical. Prices kind of spiked. So May was really the peak of where prices are. Prices have definitely come down. You see we're still not at where we were in January. So prices haven't fallen that much. And if you look at September, October, November, we've really almost leveled off here. November was a little bit lower, and I think we'll see December a little bit lower than that, like I said, and then January, February, and then I think we're going to kind of come right back up to some really moderate and steady growth. To end things up, I wanted to take a look at like the last 10 years. This is for the Austin area. You can see back in 2011, home prices were probably right in that 275 for the average home price. Right now, we're ending the year at just a little bit, right around the $600,000 range. So this will come down. I think we're going to be probably end up somewhere between 2020 and 2021. So average home prices just generally in the Austin area will probably be in the low to mid fives is I think where we're going to be next year. So to wrap things up, obviously I do not have a crystal ball, so I can't tell you exactly how things are going to end up. I'm feeling pretty good about where we're going to be next year in the market. Rates have already come down a little bit in the last couple of weeks. Rates are still a little volatile. They're depending on what the Fed's going to do, how unemployment is, consumer spending. Unemployment is oddly still too low for the Fed, so they're a little nervous about that. So that tends to make them want to raise the rates a little bit higher. And consumer spending is slowed down a little bit, but not as much as they would like. So they would like people to stop spending as much money. But I think the Fed meets next week, so I think they're going to continue to raise interest rates, but they've been doing 0.75 basis points. I think it's going to be lower this time around. And we'll probably have next year, they'll still raise rates a little bit, but at slower amounts. And then once they stop raising rates, that's when they're going to be feeling pretty good about things. And that's when I think we'll start seeing mortgage rates really kind of modify right there. But there are good deals to be had. A couple things to keep in mind. New builds can be a really good option right now. There's a lot of inventory out there for new construction homes. Those builders have been kind of a little bit of pests in the last couple of years with the way they've run their business, but they need the business now, and they are certainly willing to negotiate in most cases. Another item to keep in mind that's really interesting, lenders right now are getting really creative with different financing options. So you have buy downs, so they can buy down rates temporarily for a couple of years, and then you can refinance later on. I ran across and chatted with one lender last week who does not get their loans backed up by Fannie Mae or Freddie Mac. They're a private investor, so they don't have the same regulations that most lenders would have. So you can come in at 5% down. There's going to be no PMI, which is private mortgage insurance. That's usually $150, $200 a month. So you don't have that in your payment. And their interest rates are a little bit lower typically than a lot of lenders out there because they are 100% private. So it's kind of a portfolio loan product. FHA loans have been really good for folks with a not great credit and with low down payments. This portfolio lender can do all of that too, and you don't even end up having to do an FHA loan, which will save you your PMI. Because keep in mind, FHA loan, PMI is locked in for the life of the loan. Conventional, it is not. It'll fall off quicker than that. But with this one lender, for example, you don't pay it at all. So that could save thousands of dollars a year in house payments too. So some really interesting stuff going on in the market right now. Please feel free to reach out with any questions. I am happy to chat with you about what's going on in the market, and things change pretty regularly these days, but I would be happy to keep you updated. Feel free to reach out. Thanks.